Yeah. Apologies for the technical difficulties. So I'll start over from the beginning. So AgriFrontier, we provide bespoke services to agribusinesses. We have been doing this for the past 10 years. We have offices in the UK. We also have offices in the West Africa, and we also have offices in the Eastern Africa, where I'm currently located. So over the years, we have helped enterprises with their investment readiness journey. We have provided consulting services, and we are also helped with recruitment of executives in different organizations. So in Ethiopia, we have helped with the facilitation of an investment deal for a flour company. And in Kenya, we have also helped with a merger transaction for a flour company. We have also helped with an avocado feasibility study in Kenya. So we as at AgriFrontier, we provide consulting services. This includes feasibility study, business valuation, strategy development. We also help with investment in terms of fundraising, investment readiness. We also help with HR and executive recruitment search, and also help with agronomy support through our partner CropNuts. These include soil testing and mapping, and water and environmental testing. So we found out that there was a gap with the missing middle, where they didn't get the required support that they may require at their critical point of their business. So that's why we developed AgriFrontier Growth Hub. This is essentially to help SMEs with bespoke business advisory services. This includes investment readiness, and also includes how the SMEs can improve their governance, and also support them with access to findings to both expand to the regional and international market. So with the Growth Hub, we have structured our support in 3 phases, which include the pre-funding support, fundraising support, and post-fundraising support. In the pre-funding support, this involves essentially helping businesses develop their strategies to promote their organic growth. With this, we help with the development of business plans, a strategic plan, conducting market research. We also help with formulating compliance and operations for the business, and we also help with technical support. This includes agronomy and capacity building services. Then once we know that the business is investment ready, we move on to support them with the fundraising for either debt and equity. With this, we help with developing a capital raising plan. We also identify different interested investors and lenders. We also help with applying for equity and debt, and also help with the managing of different multiple interested investors, and make this business with the right investments. And we also help these enterprises to prepare for due diligence, which is the topic for today on how businesses can navigate due diligence. Then we move on to the post-investment support, which essentially is operationalizing how do a business operationalize their strategic plan through either mentorship and coaching, through their operational support, and through identifying different management gaps, and also how do we close these management gaps, and also help with creating reporting systems, and how do they operationalize these systems. So moving on to the topic of today, we will be talking about on how businesses can navigate due diligence. With this, we will take the following flow, which is 1, understanding the due diligence process, then on how to prepare documentations for due diligence. Then we will move on to financial scrutinies. What do you expect in terms of the financial scrutiny, and we also look at the legal and regulatory compliance requirements, and also look at the operational and organization assessment, and how do you mitigate red flags, and also in terms of what the different due diligences checklist. So in terms of understanding the due diligence process, we start off with defining due diligence. Due diligence is like a health check for your business. With this, investors look at the overall health of your business and identify any potential risk that your business might pose or might face. So there are different types of due diligence, which include financial due diligence. With here, investors examine your financial statements, your profit and loss statement, your balance sheets and cash flow projection. Here, what they are looking for is your financial stability and the growth potential of your business. Then we look at the legal due diligence. This involves really scrutinizing contracts, licenses, and agreements for your business. With this, what we want to ensure is whether the company is compliant with laws and regulations. Then we move on to operational due diligence. This is where investors see how basically you run your day-to-day. They assess your production process, your supply chain management, and your overall efficiency of your business. Then there is commercial due diligence, and here investors evaluate the market and the competitive landscape of your business. Here, investors try to understand your target market, your customer segments, and how you stand out from your competitors. Then we look at the technical due diligence. This is why we look at the in terms of technology, assess your software, your patents, and any technological risk that your business might pose. Then why is due diligence important? In terms of significance of due diligence, one, it helps with mitigating risk. This is for both parties, the investor and also the entrepreneur. Here we we look at the potential pitfalls and allows party to address them before they become deal breakers. And we also due diligence is important because it enhances confidence and it elicits trust for the investor when they are investing in your business, and it helps the investor have a clear understanding of your business strength and weaknesses. Due diligence also helps with evaluating your business. Once investor undertakes the due diligence, so positive findings can lead to a higher valuation, while risk might lead to a lower one. And we also, due diligence helps with the negotiation. So based on the outcomes of the due diligence, they shape how the negotiation between the investor and the entrepreneur will proceed. So in this, so key to note is also here, positive findings give leverage, while negative ones require adjustment to the deal terms. Yeah, so in terms of the timelines, due diligence take three forms in terms of timelines. One, investors have a preliminary due diligence. This is where they conduct an initial research phase for your business by they review the available materials that the company have, and with this this helps them make a decision on whether to proceed with a deal or whether to not proceed. Then once the entrepreneur moves from the preliminary due diligence, then we move on to a detailed due diligence. This is where now the investors go into detail. They conduct a more thorough investigation of your business. This involves examining all your financial records, legal documents, and also your operation process. Then once the investor is satisfied with whatever they have found, they move on to the final decision. And this is where now, due to what they have found, then they can move on to either invest or renegotiate or withdraw from the deal. So due diligence challenges, sometimes due diligence is very consuming, and entrepreneurs must be patient with the process because as it can delay the entire fundraising process. So it's very resource intensive because both parties are required to invest in both legal and financial expertise, which will ensure that the deal moves smoothly. Then it involves a lot of information sharing for the entrepreneur. This is where entrepreneur is required to provide detailed information about the business, even the most sensitive information about your business. So for entrepreneurs, understanding due diligence is a non-negotiable for successful fundraising. It's more than a formality. It's normally one of the crucial steps in building trust and ensuring that both sides are making informed decisions. So what documents do you require when you are preparing for due diligence? So in here, you require various aspects of documentation. This includes financial documents, legal documents, operation documents, and marketing and commercial documentation. In terms of the financial documents, this involves financial statements, be it the balance sheet, cash flows, as this information provides insights about your business's financial health and sustainability. Then there is the audited accounts, which ensures credibility to your numbers and reduce skepticism. Then there is a financial projection, which essentially highlights your future plans of the business in terms of your revenue projection, cost estimates, and also growth plans. Investors want to see here is your business potential. Then there's the legal documentations. These are the contracts and agreements that the entrepreneur has with different partners, such as clients, suppliers. All other documents, agreements includes loans, leases, and joint ventures. Then there is intellectual property. This is required to prove of patents, trademarks, copyrights, and licenses for proprietary technology. Then also documents that are required is legal disputes, any legal disputes that a business might be involved in. This ensures that there is transparency and also in building trust. Then in terms of operational documents, here the investor will look at the organization structure. The entrepreneur is required to provide an overview of the company's hierarchy and roles of key team members. Then we look at the operation process. We look at the detail your production, distribution, and supply chain to showcase efficiency and scalability. Then we also look at the inventory management. This is where you explain how you manage your inventory. In terms of the marketing and commercial documentation, we here the most of the required documents are the market research, like what research have you conducted in terms of your market, what has informed really your target audience, and also your competitive edge based on your competitors. We look at the marketing strategy. You share your marketing plans, campaigns, and how you intend to attract and retain customers as your business grows. And also key to note, the sales data. This highlights all your sales figures, conversion rates, and customer acquisition costs. So yeah, then other documentation required involves regulatory compliance, which includes patents, licenses, and certificates required for your industry. Then there is insurance that provide information about your insurance coverage and potential risk. Then we look at the employee information, trying the key employee details and roles they play within the organization. So in terms of data organization and accessibility, it is a requirement that most of the data of your enterprise should be kept in a digital format, and you should have a data room that which is secure, and you can give access to investors, and they can easily follow on the different documents there within the folder. And also there is need to ensure that all the documents are up to date. So in this, one key tip for this in terms of data, you should start early in terms of compiling all the documentation, and also ensure that everything is there. And by starting early, you ensure that there is no omissions in terms of documentation that are required. So the next thing we look at is in terms of financial scrutiny. This is where now we look at the different aspect of your financial aspect of your business, which includes your financial statements, financial projection, and your key performance indicators. So in terms of the financial statements, we look at the balance sheets, the income statement, and also the cash flow statements. And also in terms of the financial projections, we look at the revenue forecast, expense estimates, and also the profit margins. And also key indicators that investors look at are the financial KPIs and operation KPIs, and also in terms of your burnout rate and runaway rate. So in terms of the burnout rates, this is shows how your business quickly spends capital. A high really burn rate indicates that the business is inefficient, and in terms of the runaway means especially of how long your business can utilize your current funds to sustain operation. So a longer runaway for shows that your business is really attractive to investors. So in terms of the legal and regulatory compliance, this is, we look at the different licenses and permits, intellectual properties, and potential risk. With this, what is important is to show that your business is complying with the required laws and regulation, so that we can ensure that there will be no risk that will be legal risk to potentially come into the business in future. In terms of the licenses, what is required here is to show that your business have all the necessary permits and licenses to operate in the industry, and also that these licenses are valid. Yeah, and then in terms of intellectual property, in case your business has any intellectual property protection rights, be it whether it's a patent or a trademark or a copyright or any trade secrets. With this, there's need to ensure that all of this is are well kept and up to date. Yeah, these documents really ensure that your company is protected and nobody can really copy whatever, be it a recipe or anything that your business is undertaking. So also in terms of legal and regulatory compliance, we look at different agreements. These are agreements, one between clients, agreements with the suppliers and vendors, and partnership agreements with this. Here we discuss with partners or collaborators, ensuring mutual responsibility. Then there is also other, in terms of other legal compliance, which includes employment and labor compliance. This is ensure that all employees have contracts and ensuring that legal compliance and protection for both employees and the company. Also assess whether the company complies with the labor laws within the country, such as working hours, minimum wages, and employee benefits. Then we look at the data privacy and security. This includes data collection, clarify how you collect and store customer data or user data, and also whether you comply with the data protection rules. And also in terms of cybersecurity measures, this is also to ensure that you protect sensitive data for the clients, suppliers, to avoid any breaches or unauthorized access. Then there is also environmental compliance. This ensures that the business complies with all the environmental laws, that if you operate in an industry with environmental impact. We also look at sustainability initiatives, like highlight any eco-friendly practices that align with current trends and regulations. And we investors also look at legal disputes and regulations. Transparency is key to disclose any ongoing or legal dispute. Yeah. And also look at risk management, like discussing how you mitigate potential legal risk and work to prevent future disputes. Then there is contractual obligation. These are documents like leases and loans, showcasing all the different elements and clauses that different partners have put in their agreements. And also this helps with reviewing terms with different suppliers, showing responsible really financial management. So in terms of operational and organization assessment, we look at what are the corporate structures, the management team, the human resource, and also the operational processes. In terms of the corporate structure, yeah, it's all about your legal structure, how your business has been incorporated, whether it's a sole proprietor or a limited company. We also look at ownership breakdown. This is whether it's among the founders or among the employees or potential investors. So in terms of the employees, is whether you have employee share options within your company, and how does it affect your company in general. We also look at the shareholders agreement, this outlining rights of and agreements of the different shareholders. In terms of management teams, here it's important to introduce your management teams and their different roles, highlighting all their experiences and expertise and how they contribute to your business's success. Then in terms of the human resource, there it's outlining the size and composition of your workforce. This includes the full-time, part-time, and contract employees. So also there is in terms of operational processes here, it's key to look at the value chain, like how you are required to like describe the end-to-end process of delivering your product or services from production to delivery and post sales support. Efficiency measures, this is you discuss how you optimize processes for efficiency and minimize waste and ensure consistent quality. Then there is scalability and growth. This explains how your business can handle increased demand without compromising quality and efficiencies, and also discuss you required to discuss strategy for entering new markets or expanding your customer base. With this, once you're able to clearly highlight all these, an investor can be able to understand like what are the long-term goals for your business and how they can plug in onto the goals based on the funding that they will inject into your business. Then there's technological infrastructure. This essentially they look at what tools and technology you use for your operations, sales, marketing, and customer service. Then the data scrutiny. This explains how you place you have in place to protect sensitive data and ensure ensure cybersecurity. Then there is risk management. This how do you identify risk and how do you mitigate all these risks, be it either regulatory risk, yeah. So then there is regulatory compliance. This essentially looks at your operational safety. This in terms of compliance with industry specific regulations related to operation and safety. Then we look at health and environment. Are your employees safe when they are working in your factory, or are you adhering to all health regulations as highlighted by the law? Then we look at the key partners in terms of suppliers relationships. What are the relationship between with your key suppliers, and also in terms of distribution partnership, discuss any partnership that enhance your distribution reach. Then also in terms of change management, this it's required to explain how your business adapts to changes in the market and customer preferences or industry trends, and also how in terms of how are you able to pivot your operations when necessary to seize new opportunities. Yeah. So the next topic is about mitigating red flags. With this, it's important. Sometimes red flags might come up during the due diligence, and it's important to understand how you navigate these red flags. But first, you need to identify any red flags that might be come up during the due diligence process. One, be it either financial irregularities. One is if there is any financial inconsistencies, there's need to highlight this, like sudden fluctuation in revenue or any unexplained expenses. So be ready to explain all this to an investors. In terms of legal disputes, this is to disclose any ongoing or past legal conflicts that might arise and concerns. Then there is operations challenges. This like how do you address any disruptions in your supply chains or production process that might impact your business, and also ethical concerns. Be prepared to discuss ethical dilemmas or controversies related to your business practices. And also in terms of customers' complaints, like how do you address any complaints that customers come up with, and how do you mitigate and highlight any underlying issues. So in terms of addressing and mitigating red flags, transparency is key. This is one of the key things I am emphasizing through these webinars. There's need to be upfront about any issues that might arise. Yeah, so investors appreciate honesty and may be more forgiving if you are proactive in addressing concern. And also root cause analysis. If you have encountered challenges in the past, explain the root cause and the steps you have taken to rectify them. Mitigation strategies. Present strategies. This is essentially highlighting all the present strategies you have put in place to prevent future red flags. This could include improved internal control, enhanced risk management, or updated policies. So, what are the required checklists that you might have received from an investor during the due diligence? So, the checklist that most investors give entrepreneurs, they are in 4 sections, which include financial due diligence, legal due diligence, operational due diligence, and commercial due diligence. In financial due diligence, this, as I had highlighted earlier, this includes all your financial statements, be it for the past 3 or 5 years. These statements must include your balance sheets, income statement, and cash flow statements. Then also there is audited financial reports, if applicable, which enhance your credibility. Then there is a detailed breakdown of your revenue sources and cost categories. Then there is a projection of your future revenues, expenses, and profit margins. Then there is information about your outstanding debts, loans, and repayments terms, and also your capital structure breakdown, showcasing equity, ownership, and any existing debt. So in terms of legal due diligence, what is checklist? The checklist normally have a question on you to list all your licenses, permits, and certification required. You are required to have copies of your contracts and agreements with the suppliers and partners, intellectual property documentations. These include patents, trademarks, copyrights, and licenses. Then there is information about ongoing or past legal disputes and resolutions, and documentation of regulatory compliance effort and any violations. Then there is also need for the employment contracts, policies, and how do you comply with the labor laws. In terms of operation due diligence, the checklist normally involves organization charts outlining your the management hierarchy and key team members. Then there is a brief bibliography of the key team members, highlighting their qualification and experience. Then there's an overview of your company operations from production all the way to delivery. Then there's inventory and management strategy protocols, if applicable. And then there is explanation for your scalability plan and growth strategies. Then there is overview for technology, infrastructure, and cyber security measures. For commercial due diligence, here what is required is the market analysis, including target audience, industry trends, and company landscape. Then there's marketing strategies and campaigns with data on their effectiveness. Then there is sales data, conversion rates for clients, customer acquisition costs, and also customer retention strategies. Then there is information about your unique selling proposition and competitive landscape, and details about your customer feedbacks and satisfaction, including any complaints and how you have resolved different complaints. Then lastly, what is required in a due diligence checklist is data privacy and security measures, compliance with data protection regulations, environmental and social responsibility initiatives, information about any outstanding or pending litigation, dispute or regulatory compliance, risk management strategies for identified operation and market risk, information also about your investor relations and communication. Yeah, so thank you. That's a quick high level of what due diligence is all about and the different documents that you're required to develop and have in place. So like I had highlighted, this due diligence planning process takes really a long time, and there's need to start off with the different little bits of each section and ensure that by the time you're investor facing, that you have everything on board. I will welcome any questions that you might have. Yeah, thank you.
Hi, Penina. I wanted to know whether you'll be sharing your deck. I can't hear you speaking.
Pardon, Luna?
I just wanted to find out whether you'll be sharing your deck.
Yes, I'll be sharing the deck after this. Yeah, and we will also be uploading the webinar also on YouTube. Yeah, thank you.
All right, thanks, Penina.
Okay. Anne is asking what documents are required for legal and environmental due diligence. Legal all documents required includes these clients agreements, supplier agreements, and also partnership, any partnership agreements that you might have, and also employment contracts, and how do you also comply with the labor laws, and also data protection documents. And in terms of environment, this there's what is required is like NEMA certification, and also operational safety, health, compliance documentation. Yeah, so this is to ensure that you comply with all the environmental laws. Yeah. Any other question? Okay, there being no other question, thank you for attending today's webinar. In case you have any questions, please feel free to email me on the AgriFrontier email, which is info@agrigrowthhub.com. I'll be happy to support you or have a discussion further on how you can navigate due diligence, and what other areas do you need to look into for your business, and tailor make your the conversation based on your business. Yeah. So okay. I will yeah. We normally conduct webinars on a monthly basis, mostly the last week of the month. We will share out invites in terms of different the topic for next month, and also we look forward to hosting you next time. Thank you so much for your time. Look forward to interacting with you. Yeah. Bye.